Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Like many large consumer discretionary stocks, like my Lulu stock and Jeremy's Nike stock, Disney stock has been on a losing streak lately. It's now traded under $90 a share. Is the theme park getting too expensive to make any sense? Or are we already in a recession at the time when they are so close to make Disney Plus profitable? Why are investors selling out of this stock, especially an insider like this? We have one of the largest shareholders in the company, former Marvel Entertainment Chairman Ike Perlmutter, finally sells $4 billion worth of Disney shares. So, in this video, I am going to talk about this news in related to my plan to buy more Disney stock. What price should be a good entry point? Because margin of safety is so important in this game. My Lulu stock just got hammered again today. I really should have waited longer to jump in. So I will use my patience on Disney here. There was once a time in the United States when a trip to Disneyland was part of the summer vacation standard, but those times are increasingly changing, and many today despair of the chance to ever return. The price of a Disney experience these days is, for a lot of families out there, downright impossible to fit into a budget. So Disney, facing a decline in park attendance, is working to turn things around because of a couple dozen super wealthy people a day do not make for a working theme park. Disney is paring back hotel rates, offering summer dining plans, and even lowering ticket prices on some of its parks in a bid to draw regular people back to the park. Even that prices of one-day park hopper ticket had risen as high as $254 each. It was clear something needed to be done, so either Disney lowered prices to attract people, or people simply just can't afford to go there anymore. It's at the very edge. How does Disney get here? This probably has to do with this current Disney management. So who is the former Marvel's chairman? Ike Perlmutter. Why is he selling all of his Disney shares? How much trouble Mickey Mouse gets himself into now? Ike Perlmutter has sold his entire stake, but he had been sitting on those shares for nearly 15 years before he finally decided to sell. So he was the head of Marvel Studios when Disney bought it, and eventually he was pushed out basically by Bob Iger and Kevin Feige. Ike Perlmutter, a major Disney stockholder who lent his shares to support a shakeup on the company's board, has now sold all of them and is moving on, according to a report in the Wall Street Journal. When reached through a spokesperson, Perlmutter, who accumulated the holding when he sold Marvel to Disney in 2009 for more than $4 billion, didn't disavow this. Perlmutter had supported Nelson Peltz in the first run at a Disney board seat in 2022, although the activist investor ultimately backed down as Disney began to restructure. Nelson Peltz once again returned a tremendous amount of capital gains on those shares, having picked up Disney for around $85 to $90 on average per share. When he did in 2022, selling them out when the stock was at one of its more recent peaks, closer to $120 a share. Everybody was happy about that. But saying he was ultimately unsatisfied by the turnaround efforts and worried about secession, Peltz started his campaign again, seeing it through the second time to a bitter proxy fight that he ultimately lost this spring. The former Marvel executive was ultimately fired by Disney after Bob Iger returned as CEO. Ike and Nelson were working together to try to encourage the board or convince the board to put Nelson on the board. Iger said then, They have a relationship that dates back quite some time. We bought Marvel in 2009. I promised Ike the job that he would continue to run Marvel after that. Not forever, necessarily. In the second round, Perlmutter gave Peltz authorization to vote his shares as the billionaire founder and CEO of Trian Partners, sought 2 board seats, one for himself and the other for former Disney executive Jay Rossello, meaning Disney shareholders would have had to eject 2 board candidates backed by the company. After a battle, shareholders voted in April to re-elect Disney's board, snubbing the outsider candidates. Perlmutter sold his entire position of 25.6 million shares in the months after that vote, said the Wall Street Journal, citing communications with an investment advisor seen by the publication. Specifically, he sold his stake between early April and mid-July at an average price of just under $115. Ike Perlmutter, a major Disney stockholder who lent his shares to support a shakeup on the company's board, has now sold all of them and is moving on. In a parting dig, he told the publication it's because he doesn't have confidence in management and that he might be a buyer again if it falls to $65 to $75. Disney is expected to publish its Q3 fiscal year 24 results in early August. I expect Disney's revenues to come in at $23.2 billion for the quarter, slightly ahead of consensus estimates, marking an increase of about 3% compared to the last year. I expect earnings to stand at $1.19 per share, roughly in line with consensus and up from $1.03 in the year-ago period. So what are some of the trends that are likely to drive Disney's results? We expect Disney's theme park business, which has been the company's strongest performer post the pandemic, is likely to see its growth slow down over Q3. During Q2 fiscal year 24, Parks and Experiences revenue grew by about 10% year over year to $8.4 billion, driven by Disney Cruise Line business and Disney World in the U.S. On the international side, Hong Kong Disneyland outperformed, driven by pent-up demand post the COVID-19 reopening and the new World of Frozen attraction. However, Disney's management has indicated that it was seeing signs of a moderation from peak post-COVID travel, indicating that these growth rates are not sustainable. In fact, Comcast, which owns rival Universal theme parks, noted it saw revenue from theme parks decline nearly 11% to $1.98 billion. Although this can be attributed in part to a lack of new attractions in Universal's theme parks. The broader slowdown in post-COVID travel is also a factor. Disney's entertainment business saw some headwinds over Q2 amid lower advertising and affiliate revenues. Overall sales for segment declined 5% year over year to $9.8 billion, and we could see headwinds over Q3 as well, amid a mixed economy and weak consumer spending. However, the theatrical business could see a bit of a boost from the Inside Out 2 animated movie, which has seen global sales of over $1 billion. Investors will also be closely watching the performance of Disney's streaming business, which has faced headwinds of late due to mounting competition, the impact of price hikes, and the loss of rights to stream the popular Indian Premier League. Over the last quarter, overall sales of the direct-to-consumer streaming business rose by about 13% to $5.6 billion. Over the last quarter, the Disney Plus core subscribers rose by more than 6 million, with ARPU also seeing gains. So is Disney stock undervalued in the current environment? Despite concerns in the streaming and media operations, I remain positive on Disney stock for a couple of reasons. Disney is looking to unlock more value by restructuring its business while cutting costs to bolster profitability. The company expects expects to meet or exceed its goal of cutting about $7.5 billion in expenses by the end of this fiscal year, with earnings per share projected to grow at least 20% versus the last year. I value Disney stock at about $137 per share, which is about 50% ahead of the current market price. I will be a buyer too if Disney stock falls under $70 a share. Disney is having some success with the international parks, but it's just not enough to make up for softening attendance in places like Orlando, Florida, and Walt Disney World, and of course, Anaheim, California, where they have a strike looming over their head, which could do some serious damage to their ability to keep up the parks running at the same capacity and levels that they have now. With the state of the economy right now in North America, consumers are in recession. We have Canada's central bank cutting rates again, 2 cuts in a row. We have people like Daniel DiMartino Booth saying if Powell has to wait until September to cut rates, it might be already too late.
Something is definitely going to give, and I get the sense that something's going to give in the next few months. And then all hell breaks loose. America in recession, everybody's getting fired across all industries, and it's happening really fast. Americans are working as much as they can, but Americans don't have enough work to make ends meet. There's a lot of unrest. It's no longer possible to gaslight the United States populace. They know something is wrong.
But it will create tremendous buying opportunities for us to buy stocks like Lulu and Disney. Right, Ted? Like Lulu and Disney? Oh, yeah. Right? You like Disney. Oh, you like Mickey Mouse. You like the chicks with the Lulu pants. Oh, he likes both companies, he said. Ted, you're so cute. Oh, you want them to subscribe? Okay. Ted says subscribe to the channel, please, if you haven't already done so. Thanks, Ted.